Bismillahirrahmanirrahim. Assalamualaikum warahmatullahi wabarakatuh. Pada sidang akhbar ini, Bank Negara Malaysia akan menyampaikan taklimat mengenai prestasi pertumbuhan ekonomi negara pada suku keempat tahun 2018. Taklimat ini juga merangkumi perkembangan moneteri dan keuangan di Malaysia. Jabatan Perangkaan Malaysia adalah agensi rasmi yang mengumpul dan menerbit statistik KDNK negara. Please allow me to continue the presentation in English. As you may be well aware, in the past we seldom have a press conference for the release of the fourth quarter economic performance, for the reason that in March we would be holding a press conference for our annual report and the financial stability report. However, we have received feedback on the value of events like this. Therefore, I am pleased to announce that going forward, we will be having a press conference for the fourth quarter economic performance. As usual, I will be taking questions at the end of the presentation. But since we will be meeting again next month, I would like for this press conference to just concentrate on the fourth quarter GDP and for us to be able to share with you a fuller assessment as the economic performance this year and the next year during our annual report release. So I hope all of you will be patient. In the fourth quarter of 2018, the global economy expanded at a more moderate pace. In advanced economies, improvements in labour market conditions continued to support household spending. Investment activity, however, moderated amid weak business sentiments. Slower investment in the US also partly reflected waning effects from tax reforms initiated in 2017 and 2018. Growth in China moderated in the fourth quarter amid continued economic rebalancing and measures to preserve financial stability, but it still recorded relatively strong growth of above 6% in 2018. In regional economies, sustained domestic demand continued to support growth. The Malaysian economy expanded by 4.7% in the fourth quarter of 2018. Growth was supported primarily by resilient private consumption. The impact of disruptions in commodity-related sectors in the second and third quarter of 2018 have also receded. This improvement has provided some support to growth. On the demand side, private sector activity continued to anchor growth. Private consumption registered a robust growth of 8.5% in the fourth quarter. Household spending was supported by income and employment growth, with additional impetus from government measures to alleviate cost of living, such as the special payments to civil servants and pensioners. Firms continued to invest, although at a slower pace. On the supply side, services and manufacturing sectors, which account for close to 80% of GDP, remain the key drivers of growth. The services sector was driven mainly by growth in the wholesale and retail trade subsector. The manufacturing sector growth was supported by continued expansion in the E&E and transport-related production. For the full year 2018, the Malaysian economy grew by 4.7%. The growth performance is highly respectable, reflecting resilient private sector spending, support from net exports, and continued expansion in the manufacturing and services sectors. These factors offset the supply disruptions in the commodity-related sectors, the rationalization of government spending, and the challenging external environment. The current account surplus widened to 10.8 billion ringgit, or 3% of GNI, in the fourth quarter of 2018. This was on account of a higher goods surplus and a smaller income deficit, which more than offset the larger services deficit. The goods surplus of 33 billion ringgit was due primarily to stronger manufactured exports in both the E&E and non-E&E segments. For the full year of 2018, the current account balance registered a surplus of 2.4% of GNI. Looking ahead, the current account is expected to remain in surplus, driven by continued goods surplus amid continued deficits in the services and income accounts. FDI also improved in the fourth quarter of 2018, registering larger inflows of 12.9 billion ringgit compared to 4.3 billion ringgit in the preceding third quarter. These flows are a reflection of Malaysia's continued attractiveness as an investment destination. FDI was channeled mainly into the manufacturing and services sectors. Advanced economies remain important contributors of FDI during the quarter. Let me now move on to the monetary and financial developments during the quarter. Headline inflation declined to 0.3% in the fourth quarter last year. The decline was due mainly to the transport inflation turning negative. The combined impact of the GST zeroization and implementation of the SST continued to exert a downward impact to headline inflation. For 2018 as a whole, headline inflation averaged 1%. In 2019, inflation is expected to average moderately higher. However, underlying inflation, which excludes the impact of the consumption tax policy changes, is expected to remain broadly stable. The Monetary Policy Committee kept the overnight policy rate at 3.25% at its meeting in January 2019. Despite the global headwinds, domestic growth is expected to remain on a steady growth path, with headline inflation averaging only moderately higher. The MPC will continue to closely monitor the key global and domestic developments for the potential impact to domestic growth and inflation. The stance of monetary policy remains accommodative and supportive of economic activity. Domestic financial stability was also preserved in the fourth quarter of 2018. The financial system remained resilient, while domestic financial markets continued to function in an orderly manner as confidence in the financial system was sustained. The banking system and insurance industry remain well capitalized to meet unexpected shocks. The excess capital buffers of the banking system and the insurance industry remain strong at 143.1 billion ringgit and 36.8 billion ringgit respectively. And stress tests affirm the financial institutions' resilience to severe macroeconomic and financial shocks, both at the system and institutional levels. And the banking system liquidity remained sufficient to support intermediation. All banks maintain liquidity coverage ratio above the minimum 100% requirement, and the banking system surplus liquidity of Bank Negara remains sizable at 171.8 billion ringgit. Net financing grew by 5.8% in fourth quarter of 2018. Outstanding corporate bond growth moderated during the quarter from the double-digit growth rate in the previous quarters due to the high level of issuances in 2017. Growth in total loans outstanding was sustained at 5.1%, with continued increase in business loan growth. The growth of outstanding loans to households remained steady during the quarter, growing by 5.2%. The ringgit depreciated by 1.8% against the US dollar in 2018, in line with most regional currencies, but appreciated by 1.5% for the year to date. In the fourth quarter of 2018, the ringgit appreciated marginally by 0.05% against the US dollar, despite non-resident portfolio outflows. Throughout most of the quarter, risk-off sentiments dominated global financial markets amid uncertainty surrounding the pace of US monetary policy normalization, slowing momentum of global growth, and global trade developments. This led to the unwinding of non-resident portfolio investments from the region, including Malaysia. However, these outflows were offset by resident inflows, mainly from goods and services, which led to the marginal appreciation of the ringgit during the quarter. In 2018 as a whole, the ringgit performed well relative to regional currencies. Going forward, ringgit will continue to be affected by external uncertainties, particularly related to developments surrounding the US monetary policy, global growth, and global trade relations. Malaysia's external debt edged lower by 8.4 billion ringgit during the quarter and remains manageable given its currency and maturity profiles. Importantly, there is no immediate risk from the level and composition of external debt, and the bank will continue to monitor its trajectory to ensure its sustainability going forward. International reserves to short-term external debt coverage at one time remain sufficient to facilitate international transactions. Malaysia's short-term external debt is mostly by banks, which arise because of the centralization of treasury operations of our banks operating in the region and the sizable presence of foreign banks in the domestic economy. Banks' intra-group borrowing of 154 billion ringgit account for 50.3% of short-term external debt. And of the bank's foreign currency short-term external debt, only 26% could be considered more susceptible to withdrawal shocks. That is, what we classify as debt at risk. Importantly, the bank's foreign currency liquid assets stood at 136 billion ringgit, which is more than twice the foreign currency debt at risk. These liquid assets can be drawn upon to meet their short-term debt obligations. So a brief word on the prospects for 2019. It has always been our baseline case that 2018 will be a year where the economy will moderate from the exceptional performance in 2017. However, as you may be aware, we were impacted by a number of unanticipated one-off factors, such as supply disruptions in the CPO and natural gas, and the brief period of policy uncertainty following the general election. For 2019, global growth will move closer to its longer-term trend. There will be negative spillovers from the global trade tensions, and we have built this into our forecast. But there will be other factors that will sustain headline growth, such as commencement of RAPID, which is the oil refinery and petrochemical complex. There are new E&E facilities, for example, the automotive semiconductors, biomedical, aerospace. There's also retail outlet expansions, and there is going to be sustained domestic demand, which encompass private consumption, civil engineering projects such as the MRT2, LRT3, and Penbonio. There will also be recovery from the supply-side disruptions in gas production. And some of the high approval manufacturing investment figures will also be translated into actual investments in 2019. All in all, while there are downside risks, the baseline forecast for 2019 is for the economy to remain on a steady growth path. I have come to the end of my presentation. My team and I, as well as the Department of Statistics, will be pleased to take questions now. Thank you.